You may please go ahead.
Good afternoon, everyone. I am Archana Parthasarathy. On behalf of Federal Bank, I would like to invite you all for our Q result conference. From the bank, we have our MD and CEO, Mr. Shan Srinivasan, Executive Director, Ms. Shalini Warrior, Executive Director, Mr. Harsh Dupra, and CFO, Mr. Venkat Venkateshwar. The conference will begin with a speech by the management, followed by a Q&A. We would request each and every participant to mute themselves during the speech. And towards the end of the conference, we will open it for Q&A. I would now request Mr. Shamsar to address the conference.
Thank you. Good afternoon, everybody. Like she mentioned, the entire senior team is there. Quickly, some highlights. You may have had a chance to see our Q2 results. Clearly, the coming together of many of our initiatives is visible. Broad-based growth across businesses, across segments, and importantly, the highest ever net profit number as a bank, and even our consolidated as a group also registered its highest ever numbers. ROA continues to trend well at 1.36. And as you know, we did have a significant capital raise through Q2. And post the capital raise also, the ROE is improved. Evidently, the rate of growth of business and profits have outstripped the increase, the dilution that we've had. So I would characterize Q2 as a strong quarter, which is visible through the coming together and the sigma of all our initiatives working well. I mentioned business has been broad-based and grown well, which it has. And even better, while the growth has been good, our gross and net NPA have improved materially on the back of significantly lower slippages. In fact, this is probably the best NPA ratios in about 8-9 years for the bank. So on balance, good quarter. We did guide for performance getting stronger from Q1 into Q2, and we are pleased that we could deliver on that. And expectations for ourselves, of ourselves, keeps increasing, and we hope to keep this momentum going into Q3 and beyond. Environment continues to be reasonably encouraging. On credit side, we are seeing good and consistent demand across products and various offerings. No secret that the market does have challenges in terms of incremental deposit growth, as in the cost of deposit growth. I think deposits are available, but the rate of growth of deposits, the cost of growth of deposits is an area that all banks are dealing with. Sometimes it's a consequence of a higher inflationary environment. It could be a consequence of global developments that are happening, or more fundamental structurally how people are moving from bank deposits to other instruments. So whatever be the explanation, and all of it probably, we as a bank are equipped to make sure that this growth on both credit and deposits consistently grows. You may have observed in Q2, our deposits grew even higher than our credit. And deposits grew 23%, our credit grew about 20%. We expect similar credit progression in the quarters ahead. Typically, second half of the year is the festive season of the year, and so the demand across products tends to increase, and we are well placed to capture the opportunities that are there. Our share in market across our product range is increasing and has been consistently increasing. So you will hopefully remember Q2 as our best ever quarter in terms of net profits, in terms of improving return ratios, ROA or ROE, credit quality turning even better, and the momentum hopefully continues to be strong. There are challenges around how does cost of deposits play out, but that's just something that is, as an industry, everybody is dealing with. So we are no different as a bank. We will find our ways to contend with it and ensure that through efficiency and other mechanisms, we constantly keep improving. Last point, our fee income as a share of assets has shown marked improvement. We are now almost 1% of our assets, fee income is almost 1% of our assets. And the rate of growth of interest income in Q2 was higher than the rate of growth of credit, which means we grew NII 7%, we grew credit assets 5%. So that nicely points to the fact that the pivot in terms of shift or velocity of some of our relatively higher yield businesses in a relatively higher interest rate environment continues to be strong, and that's encouraging for us. So I'll park here. Between me and the senior team, we'll take questions from any or all of you. Thank you.
Hello. Hello.
Yeah, please
Go
go.
ahead, ma'am.
Yes, I would like to request all the participants to open up for their questions.
So this is Ashish here from PTI. Can I go ahead?
Yeah, please.
Where is the deposit growth of 23% for this quarter on a YOY basis coming from? And how much of it is basically customer deposits? And in the absence of the same, what sort of outlook do you have on the NIMs going forward, sir?
Our deposit growth, you may have observed, has been 98% is core deposits, as in there's a customer on the other side of the deposit. And that continues to be strong. Our term Y-on-Y grew about 33%. Domestic savings grew 11%, and NR term grew about 14%. So almost all forms of deposits have grown. Current account has grown quite well. NR savings has been one area that's slowing down, and we are offsetting that through the other numbers that I mentioned, term and current account growing. And we believe that this should sustain in the quarters ahead also. And credit growth has been strong. So to fund that growth, we are able to generate the deposits. So the 23% growth has been backed by all these things. 98% of that is being what we call core deposits, which is basically client originated deposits.
Okay, sir. And sir, the outlook on NIMs, given this entire sort of situation which you mentioned in the market.
We saw, and we've been saying now for 2-3 quarters, Federal Bank saw the fall in NIMs faster than many other banks, given the way we price our assets and liabilities. And we're happy that the fall has been stopped. This quarter saw a pickup in NIM, very small, but still it's a pickup. And I also pointed out that the rate of growth of interest income has been higher than the rate of growth of credit. So we do believe that will sustain. If you're asking us to give an outlook for NIM, it will improve. The quantum of the improvement I'm holding back because we do want to see how the whole deposit game plays out. But we are reasonably confident given our ability to pivot into some of the higher yield businesses, keep our credit quality consistent and strong, and the regularity of our growth. We do believe margin expansion will happen, but the quantum of that we are not going to offer a big comment. Though I had mentioned at the beginning of the financial year, the second half will be stronger and maybe seeing a much higher pickup. We will have to watch because the environment is quite dynamic and changing quite rapidly.
Okay, sir. And which are these high margin businesses which you are much more keen to get into and such that, okay, without really affecting your asset quality matrices that they are growing?
You may have observed, and we've been saying that now for many quarters, credit cards, personal loans, commercial vehicles, commercial equipment, small businesses, gold are all trending quite well. Microfinance, all of them are trending well. These are typically higher yield than the corporate or pure commercial banking lending or retail home loan lending. So relatively, these are higher yield, and therefore that opens up the space. And that's what I said. You saw the visible impact in Q2 when yield on advances or say interest income went up 7% sequentially, while credit grew sequentially 5%.
Thank you so much, sir.
Pragati, you had a question.
Yeah, I do actually. So I'm Pragati Broad from BQ Prime. I missed some bit that you said on interest income. So could you please share that again? And if there's any guidance for the quarters ahead, that. And my second question would be about the branch expansion. So I believe in the first quarter's presentation, it was said that Federal Bank aims about 65 branches in this financial year. Is there any change on that?
Yeah.
Yeah.
We had said not 65, it said 75 or so in FY24.
Okay.
In half, we've done 35. We believe in the second half, we will see a slightly higher number. So 75 or above is what it will be the full year number, maybe closer to 100. And that's a footprint expansion FY24. The first part of your question was on margin, did you say? Or interest income? What was the question you asked? What is your question, Pragati? The first part? She seems to have gone offline. Okay, she'll come back. We can go around and she can come back.
Any other participants? If you have any questions, please state your name, publication.
Hi. Hi, this is Roshan from Madhubhumi. Can I ask?
Please go ahead, Roshan.
Please.
Sir, over the past few years, you have grown constantly well. But do you feel you have missed any opportunities?
As in, Roshan, in terms of business?
Like some acquisition or some categories you could have
No, I think
better.
where we see it, and we've spoken on a few occasions. A large part of our strategy is organic, right? Okay. Inorganic is something that you can't actively pursue. It has to come at the right time, at the right price, and the right businesses. So I'm not even commenting on inorganic. Organically, we've been growing, and you pointed out, I don't think there are many banks in the country that have had a CAGR of 15% over 10 years. I think probably one of the very few banks that has had a CAGR of 15%. And we believe that's sustainable for us because we are broad-basing our growth, broad-basing in terms of segments, products, and geographies. And we see opportunities to grow all across. So have we missed something? Like credit cards, personal loans, microfinance, commercial vehicles, are these 4 businesses we started more recently, right? In the last 2, 3, 4 years. We actually started a little before COVID, but then COVID came, we slowed it down, and then we picked it up, and the pace has gathered quite strongly after COVID. But that said, these are businesses that are constantly evolving, and there is a lot of opportunity to innovate and find new and different ways of doing it. So we are either learning or experimenting and or co-working with many partners to grow these businesses. But at an aggregate level, there is no one huge business that we are not part of. There may be slices of some businesses which we will enter, or they may not be very productive or profitable, so we'll have to be thoughtful. But on balance, our growth across different businesses, opportunity to grow into numerous businesses, we're pursuing quite aggressively.
So one more question. Recently, fintech company Slice was merged with Northeast Small Finance Bank. Like that, do you have any such plans to acquire some fintech companies?
Certainly, if there is, Roshan, I can't make an announcement on a call like this. But
are you open for that?
Nothing. We're always open to find opportunities, but nothing right now.
Okay. Thank you, sir. Thank you.
I think if Pragati is back, she can ask the question before others queue up. Pragati?
Hello, Pragati.
Yes. Can you hear me now?
Yes.
Yeah, thank you so much for taking up that, sir. So my questions were related to branch expansion only. One was about what are you aiming for the second half? Is there a number? How many branches we can expect? And first was about the interest income guidance for the remaining year. I believe, yeah.
Branches I did mention in the first about 35, and we believe a much higher number in second half is very possible. We may between 80 to 90 branches, or maybe even 100. And that's what we are pursuing for the FY24. And on interest income, the
Hmm.
momentum is reasonably strong. We grew 7% sequentially and 17% Y on Y. That's the kind of momentum we will keep improving from here.
Sir, the 80 to 90 that you're giving an estimated number, that is for the total branches for FY24 or the second half?
Full year FY24.
Okay, all right. All right, okay. Thank you so much, sir.
Thank you, Pragati. Anyone else have any questions? Please state your name and publication.
This is Atodip. May I ask?
Yeah, Deep.
Please go ahead.
Sir, I have two questions specifically. One is, what is the SLR holding you have at this point? Is there anything excess which you may think of offloading? As you said that there is some challenges in terms of deposit mobilization. That is number one. And number two is, as you said that you may, I mean, there are some businesses which are not giving that much of traction. So is there anything which you may think of changing your plan or strategy going forward?
When I said, I don't think I said not giving traction. I said we are lower share, which means we
Right.
are participating. It's where we see an opportunity to gain share. We don't have any business will vacate or slow down. There may be products that are, some other new product has come and superseded it. That's a constant part of renovation and innovation, which we keep doing. But there is no one business that we are pulling out. We are actually dialing up many of our products because where we are 1.5% share aggregate and on the flow 2% share, we should look to grow maybe 3% of the incremental share. So that's how we are looking at different business opportunities, and we see almost scope across the board. On excess SLR, and we're carrying excess SLR, but I would not offer any comment on numbers. But Ashutosh, if you want to add anything, you may want to.
No, nothing specific because excess SLR these days is required for your liquidity management. Whatever excess you have, whatever SLR you have, qualifies at HQLA, high quality liquid asset. And going forward from 1/4/24, there is not likelihood of, I think, inter-category transfers, which were permitted at least once a year in the beginning of the year. So I think this excess SLR may be there, but with credit growth of the order of 20% or so, we may have whatever is required only for liquidity management and nothing for, actually encashing.
Right. Just another part question, that what is your portfolio size of microfinance?
2,400 crores.
2,400, right?
Yes.
Have I
2,700 to be precise, is what we had closed the quarter with.
Okay. Fine. Thank you so much. Thank you so much.
Four, right?
Thank you, Atadi. Any other
Yeah, right.
questions?
Harsh and Atmadeep, just to correct, I think it's 2325.
2325, sorry.
2325. It's on slide 14 of our investor deck. Yeah.
It's a 27%.
Okay.
Growth. Sorry.
Okay, fine. I noted. Thank you.
Anything else?
Sir, good afternoon. This is Shipra from Informist Media. I just wanted to understand that the RBI governor has been flagging the rise in personal loans and retail loans in banks. So have you, what is your outlook on it? And also if you have any guidance on the the gross NPA and net NPA for the rest of the year.
On the overall unsecured, which we've all been reading and hearing, our book is about 5,000 crores, as reasonably new vintage. At this point in time, performing quite well because we are not doing new to bank at scale. We are doing existing to bank to customers. So it's a cured, refined, pre-worked database. To that extent, our credit quality is holding well. We are certainly keen on growing these businesses, but never at the cost of a higher credit. So at this juncture, we are not flagging any significant challenge or risk on these businesses. Hopefully, it will continue to perform well. And it's a key watch. I mean, when the information from the regulators are constantly reminding banks to be watchful, we'll be stupid not to. So certainly we'll keep a close watch on it. At this juncture, it looks quite okay. Credit costs for the year are in the first half been flatteringly good. I mean, I had the beginning of the financial year said our overall credit cost will be about 35 to 40 basis points. First half is like way lower. For the second half could be in that 35 odd basis points. So the blended full year number will be lower, but second half you could expect something in the 30-35 basis point credit costs for the second half.
And so your guidance for asset quality, gross NPA ratio?
It's been improving now for many quarters. This quarter was the 34 or 35 quarter best. We'll try to keep it in that zone, plus minus few basis points is okay as long as the predictability and the quality is high, which we believe it is.
Thank you, sir.
Thank you, Shipra. Anyone, any questions? Any further questions?
Okay, that was easy. Okay. Thank you, everybody.
So, sure, sir. Thank you so much for coming for the conference today. Any questions, please reach out to us, and thank you.
Thank you.
Thank you, everybody. Bye.
Thank you.
Thank you.